Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with a scenario where we first expect a bit more downside, after which we expect continuation in a bigger 1, 2 and then a wave 3 or a wave A, B and then a wave C. Common target area for your wave 2 is between the 05 and the 786, taken from the low to the high of 1, giving you a target area between 61k and 58.4k, with the 886 also being a common target for a wave B at 57.5k. The invalidation for this scenario is the low at 56.5k. Inside wave B or 2, we are looking for a 3-wave corrective structure to the downside in a WXY double zigzag. ABCW, 3-wave move up corrective structure in an X, and another ABC to the downside in a wave Y, where the common target area is between the 0.618 and the 1.236 trend-based fib extension from the high to the low of W to the high of wave X, giving you a target area between 60.4k and 57.3k. Inside this wave Y, we are then looking for an ABC towards the downside, the final 3-wave structure. And if we zoom in to this structure here, then you can see that this wave B here has been made at the 0.382 Fibonacci, taken from the high to the low of wave A, which is a common target for wave B. But more importantly, time-wise, this high is made before the 5 and the 6 fib time, taken from the start to the end of this wave A, comparing wave A with wave B in time. Now preferably therefore the high and the end of your wave B is in, because if price moves towards the upside and makes another high, this new high for then a potential B is going to be far after the 6 fib time here, which reduces probability significantly that this move towards the upside is going to be related to this impulse to the upside. In other words, if price takes this high, it increases the probabilities to continue towards the upside and take the high here at 63.4k. If we look at the common target area for your wave C, it is the 1 to the 1.236 trend-based fib extension, taken from the start to the end of A to the end of wave B, giving you a target area between 58.1k and 57.3k, which is in confluence with this support area that we have on the chart, the blue box here between 57.9 and 58.3k. We do have some support above this first blue box here below price 59.4k to 60k. To the upside, to at least mention some resistance, we have the white box here 62.2k to 62.4k, and then above the recent high here 63.4k to 63.7k. In the most bullish scenario, your low here is already in. We have a finished A or 1, a finished 2 or B, and we want to see continuation to the upside. Inside this wave 2 or B, we then look for a 3-wave finished corrective structure in a wave A, B, C, a 5, 3, 5-wave structure. And if we take a trend-based fib extension from the start to the end of your first move to the downside, your wave A, to the end of your wave B here in the zigzag 535, you can see this second leg down hit the 0.618 trend-based fib extension, which is a rare target for a wave C. However, if price can move towards the upside and take out this high at 61.4k, it will increase the probabilities for this scenario and continuation to the upside to take at least the high here at 63.5k, if not move above 65k. If your wave 2 or B is finished and we are looking for impulsive continuation to the upside, we need to count one of 3 structures in what we have here at the moment. First of all, an impulse, and then a wave 1, 2, 3, 4, 5, where you don't want overlap between a wave 1 and a wave 4, but as you can see, there is a lot of overlap and sideways price action, which then brings us to a diagonal structure where you then have your wave 1 looking for a 2, 3, 4, 5. Now in that case, it is too early to call a diagonal, because preferably you wait for your wave 4 to be in before talking about diagonals, so that is a low probability. And a diagonal like this, a wave 1, 2, 3, 4, 5, is an expanding diagonal structure, which is very rare, never preferred, unless all of the other stuff fails. So that then leaves us with the double 1-2 scenario, where this is your wave 1, your first wave 2, and then another wave 1, 2, and you want to see impulsive continuation to the upside in a wave 3. The invalidation for this scenario, however, is price taking this low here at 60.4k. In the bearish scenario, we're looking for price to take out the 56k low in either a wave 1, 2 and a wave 3, or a wave A, B and a wave C. Now in this structure, we then have wave 2 or B retracing to the 0.5 Fibonacci taken from the high to the low of 1 or A, which is a common target for a wave B as well as a wave 2. And then we are now looking for another impulsive structure to the downside in either your wave C or your wave 3. Now here we then have a finished wave 1 to the downside, and preferably your wave 2 is also finished because of time, right? So if we compare wave 1 with wave 2 in time and take a trend-based fib extension, you actually don't want this wave 2 to end after the 5 fib time, and now price is ranging after the 5 fib time. So if price makes another high, it lowers the probabilities for this particular scenario, increasing probabilities to continue towards the upside. So in the bearish scenario, preferably your wave 2 hit the 382 and you're going to look for price to move to the downside. The 382 for a wave 2, however, is an uncommon target compared to a wave B, where the 382 is a common target. When we look at the CVD divergences, we have bullish CVD divergences here, where the first bullish CVD divergence already played out, higher low in price, lower low on the CVD, where the target is the high over here, which already played out as you can see. And then with this drop to the downside, we have some more bullish CVD divergences, but this time the target is this high. We had some bearish CVD divergences, as you can see as well, lower highs on price, higher highs on the CVD, but these already played out as price took this low over here as well as this low. But what is very important is for price to move towards the upside and this time not create a bounce with, again, bearish CVD divergences. So a bounce towards the upside, retracement over here, bearish CVD. Here we move towards the upside, create a bit of a wave, and again bearish CVD. We don't want to see this with the bounce that we have at the moment. The highest probability Elliott wave scenario at the moment is the bullish scenario, where you have an unfinished WXY as long as price is staying below this 61.5k high. If price, however, moves above the 61.5k high, then your second option here is the bullish scenario, where you have a finished ABC and we're looking for price to move towards the upside. The currently lower probability scenario is the bearish scenario, where we are looking for continuation to the downside, and that is just because price over here hit the 0.382 taken from the high to the low, which is a common target for a wave B, and then a potential final ABC for your wave Y, and then continuation to the upside, compared to a wave 2 where the 382 is an uncommon target. So that gives probabilities to the ABC instead of a 1, 2, 3. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.